Hey guys, how are you? I hope all of you are doing really good. So welcome to Economics or Finance Excellency batch. Okay, so what we have been discussing about, the instruments of the trade policy, that is the various instruments which are available with the government to control the international trade, right? So these measures can be the tariffs, that is related direct relation to the price, or the non-tariff measures. The tariff measures we have already discussed. What are the various types of tariff measures we have discussed, right? So now moving on to the non-tariff measures, we started in the last lecture that what are the non-tariff measures? These are the hidden or the invisible measures, right? Which are not directly in the form of some custom duty or something, right? Which are not in the form directly in the form of customs duty or any price impositions, right? But these are the hidden or the invisible measures. Now we say that the NTMs or the non-tariff measures, they can be divided into two parts. One is the technical measures and another one is the non-technical measures. Technical measures are like the technical specifications, right? If you want to control the import using the technical specifications of a product, that the product should match this much specification, the size should be this, the quality should be this. So all these are covered in the technical measures. The non-technical measures is the other indirect ways of controlling the imports, right? Okay, so starting with the technical measures, they say these refer to the product specific properties such as the characteristics, the technical specifications, etc. for ensuring that the product quality, environment protection and the national security, so that the harmful products are not imported, good quality products are imported, and the products which are harmful to the environment are not imported. So the before the import, the products should meet the certain requirements, certain characteristics can be there, or other technical specifications can be there, right? After that, now what are the various types of technical measures? One second. What are the various types of technical measures? Let's see. The first one is sanitary and the phytosanitary measures, the SPS measures as they call them. These measures are applied to protect the humans and other living beings from toxins, pests, and contamination. SPS include the ban or complete prohibition of the certain goods which do not meet the required standards. For example, the prohibition of import of poultry items from the countries affected by the avian flu, that is the poultry flu, right? If there is any infection in the poultry in that particular country, so we have to ban that. Otherwise, what will happen, sir? It will be harmful for the human race also and for the other living beings, right? It is going to be really harmful. And if there is some product which is contaminated or which is full of pesticides, insecticides, and you are planning to import that, then also there is a complete ban or prohibition, right, for the import of these goods. So is there any direct price imposition on that? No, sir, there is no direct price imposition or the tariff imposition on that, but these are the indirect ways of controlling, so that there is not a situation where anything is being imported, right? There is the technical barriers to trade. There are mandatory standards which define the specific characteristics that a product should have, such as the size, shape, labeling. These are applicable for both the food and the non-food traded products, that you specify that if the country wants to export the product in your country, that means your country is the importing country. Let's say India is an importing country, so India will put on the specifications on the USA that okay, if you want to send the product, this should be the size, this should be the labeling, these things should be mentioned on the label, nothing should be hidden from the people, right? Whether it is a food item or whether it is a non-food item. Any product that does not conform to the standards cannot be imported. So you set the standards that this is the standard that we want, the size, shape, labeling, anything, any sort of that thing, right? Example, the food laws, quality standards, etc. So these are known as the technical barriers to trade. The first one was the sanitary and the phytosanitary measures. The second is the technical barriers to trade. So these are the two technical measures of controlling the trade. Now coming to the non-technical measures. They say relate to the trade requirements such as the trade rules, taxation policies, the shipping requirements. Now you say that I want the shipping from this particular company, that might be a costly one, right? Or the trade rules can be put into place which restrict the trade, right? Various policies can be there. These are further classified as the hard measures, that is the price and quality control measures, that this is the quality we want, and below this the price is not acceptable, right? Threat measures. Threat measure is anti-dumping duty and safeguard duty. Now you are going to threat those people that if you try to dump it, we will put this tariff on you, right? So this, in the non-tariff measures, what we are doing is we are posing a threat to them. We are asking them not to dump, otherwise we will resort to the tariff measures, right? So other measures such as the trade related finance and investment measures, that the investment is not available if you want to import a particular product but you don't have the money, and even the bank says or the government says that we are not going to provide you the foreign exchange, we are not going to provide you the money for the import of this good, as this good might not be good for our economy. Right, so these measures can be distinguished as the import related measures imposed by the importing country, export related measures imposed by the exporting country. Both ways it can be, sir. It can be imposed by some exporting countries also. Procedural obstacles, practical problems relating to administration, transportation, certification, all these things can be increased, right? All these things can be increased. Otherwise also these things are more in the international trade as comparison to the domestic trade, as we have already studied in the last chapter of international trade. So types of non-technical measures. Now sir, how to remember these types of non-technical measures? There are lots and lots of types. Sir, how to remember these types? Almost 12, 13 types are there. See, for that what you have to do is go through these types again and again and again. Read it every day. Read it every day 2 to 3 times, right? After that you will not forget this. This is the best strategy to remember the tariff and the non-tariff measures, because there are lots of tariffs and non-tariff measures, so it definitely gets difficult. One thing is clear, you understood that, right? But to remember it from the examination point of view, you might face some difficulty. Okay, now let's see the various types of the non-technical measures. What are the various types of non-technical measures? First is the import quotas. What is import quota? Sir, you set the limit as to the imports, right? Whether it is in terms of quantity or whether it is in terms of value, that the imports cannot exceed those limits, right? The quotas are basically the limits that you are setting. It is a restriction as to the quantity or the value of the goods to be allowed in a country in a year, that in a particular year from this particular country you cannot import more than this quantity or more than this value. After that, what are the various types of quota? One is the binding quota, is set below the free trade level of imports and is enforced by issuing the license, right? How it is set? Let's say there is a free trade up to 1000 units, that there is no restriction, but still if at any point of time the government feels that there needs to be a restriction below 1000 units, they can set it through the binding quota. The binding quota says you cannot import more than 700 units, and for that you need the licenses, that if you want to go beyond 700, you will need the licensing, sir. You will need to buy the licenses, which obviously increases the cost of imports, right? That is the binding quota. Now after that, it is the non-binding quota, is set at or above the free trade level of imports and does not affect the trade. So if the free trade level is 1000 units, the non-binding quota will be set at 1000 units, that the free trade level you cannot import more than 1000 units, or it can be 1200 units also, it can be above the free trade level also, but there will be binding that you cannot import more than that, right? After that, it is absolute quotas, are the permanent nature and have no limitation as to the country of origin. Permanently the quotas are said that you cannot import more than this, that's it, totally from any country if you want to, right? The tariff rate quota specifies the additional conditions as to imports from the specified countries of origin, that if you want to import the goods from China, there are additional restrictions on the imports, right? Then unilateral quota is a country unilaterally fixes a ceiling on the quantity of the import of a particular commodity. So it is a one-way traffic basically, right? Like India wants to import, India unilaterally without any discussion with the other country, it has decided that it will put the this quota on the import of any particular product, right? Bilateral is when they decide on the things, when the two countries sit, negotiate, and they decide on the things. resulting from the negotiation between the importing country and a particular supplier country, or between the importing country and the export groups within the supplier country, that this much is we can export, this much you have to put the restrictions on the import, otherwise our country will be impacted, right? So it is a bilateral when it is being negotiated, and the restrictions are being set after the negotiations between the two countries. Unilateral is there is no negotiation, right? India directly puts the restrictions on the import. They say from the China, you cannot import more than 100 units a year, right, of a particular product. This is unilateral. Clear? So these are the different types of quota. This is important from the examination point of view, right? Straightforward question can be asked on the import quotas, that what are the various import quotas. In that you will have to mention one thing, that it is a part of the non-technical measures, right? It is a part of non-tariff measures and non-technical measures. Under the non-tariff measures, you have to specify that, because in that case the examiner gets to know that you have the complete knowledge of the topic. Okay, after that what we have is the price control measures. Steps to control or influence the prices of the imported goods in order to support the domestic price of a certain product when the import price. Now this is not by the way of the tariffs. In the indirect ways, you are trying to increase the price or reduce the prices or control the prices, but that is why these are known as para tariff measures. For example, setting the minimum import price. Now you are setting the prices that at below that price we are not going to import the goods. Now is there any customs duty or the tariff that you are putting on that? No, right? So that is why it is covered in the non-tariff measures, that in the indirect ways you are trying to control the prices. After that, non-automatic licensing and prohibition, limiting the quantity of goods that can be imported regardless of whether they originate from the different sources or from one particular supplier. That means you put the limitations on the quantity of the goods. These may take the form of the non-automatic licensing and through complete prohibition. It can be complete prohibition also, or it can be non-automatic licensing, means you do not automatically get the license to import the goods. You will need to buy the licenses to import the goods, right? India prohibits the import and export of arms and related material to and from Iraq, right? So it can be from one country, it can be from multiple countries, it can be within one country also, it can be from one supplier or multiple suppliers or any supplier. So all these restrictions can be there. Non-automatic licensing means that you do not automatically get the freedom, automatically get the license to import the goods. You will have to buy those licenses, right? Financial measures. The financial measure is the government says we will not provide you if you want to import some goods, you will need the foreign exchange. The government says we will not provide the foreign exchange for the import of that particular good. Let's say it's a harmful good for the public, for the economy, then why will the government provide foreign exchange for the harmful goods? The government says that we are not going to provide any foreign exchange. Then will you be able to import the goods? No sir, you will not be able to import the goods. So that is what, that is again a indirect way of controlling. Aims to increase the import cost by regulating the cost or access to the foreign exchange, or alternative ways they will provide the foreign exchange at a very higher rate, right? The person will have to shell out more money to get the foreign exchange. In that case, the import cost will increase, and thereby defining the terms of the payment. Example, the advance payment requirement, denying the use of the foreign exchange for the certain types of imports, right? So simple things, these are very simple to understand, these are not difficult to understand. The only thing is that how will you remember so many names? For that I've told you the simple trick, that what you have to do is just keep on reading it 2 to 3 times a day, that's it, right? Then is the measures affecting the competition. The aims at granting the special privileges to a special group of economic operators, such as the government distribution channels or the agencies. Now he says, what is that? The measures affecting competition says that the permissions are given only to a specific groups for the imports, right? Others are not allowed to import. Like the government agencies can import if it's a particular product which the government feels that if it is given to the private players, it can be harmful for the economy. So the government says that only the specific government agencies can purchase or import that particular product, right? So providing the statutory marketing board with the exclusive right to import the certain goods. Clear? The government procurement policies. The government purchased the goods from the local dealers rather than the foreigners despite the high local prices. In accepting the public tenders, the local tenders are given the preference. The government says in any case we are not going to give preference to the foreign goods, right? And we are going to buy it from our local dealers only, even if it means that we have to shell out extra 10 rupees, but we will buy it from the local dealers. And as I told you that Make in India, Made in India, and this was the biggest campaign related to this, the biggest campaign. Okay, after that, the trade related investment measures, the rules to have at least a part of the final goods to be produced domestically, that everything should not be imported. You have to manufacture something in the domestic industry only, right? If you are making a final product using the multiple raw materials, then the rules can be there that at least 50% of the raw material should be locally manufactured and the remaining 50% you can import, right? To set a minimum level of local components, restricting the imported components, that if your product have all the imported components, that your product will not be approved. Then distribution restrictions can be there, restriction on the distribution of the imported goods. For example, the additional license or certificate requirement that, okay, if you have imported the goods now you obviously you will need to sell or distribute the goods, but you need the licenses for that. You are not free to do it. These may be related to the geographical restriction or the restriction as to the type of the agents who may resell. The government may keep certain goods to them only, that only the government agents or the government agencies can sell those goods or distribute those goods, right? So all these things are there. Restrictions on the post-sale services. Now they say, okay, you have imported the goods, but the after-sale services will be provided by the local dealers only. Restricting the producers from providing the after-sale services for goods exported by them. Now, if you have imported some good from the China, or if you have imported some good from, let's say, the USA, now the producer if says, okay, I'll send my person. No, the government says, no, you will not send your person. The local dealers, let's say you imported an air conditioner. The government says the local dealer will repair it. The local dealer will look after the after-sale services, not you. These services may be reserved to the local service companies of the importing country. Administrative procedures aim to increase the time and cost of import procedures so that the people are discouraged to increase their exports, right? Specification of the certain import formalities, corruption in the custom clearing, red tape barriers, and all those things are there, right? The rules of origin, the rules that make it mandatory to declare the national source of the product. Okay, they say if you want to export your product, you have to put it on the product that this is the originating source of the product, right? This is because in certain case, the duties depend upon the source of the import, right? That from where the import is coming, the duties are depending upon that. It is difficult to determine the source when the different components of the product originate in the different countries. Now, if you remember, I think it was during the lockdown only, or after the lockdown, it was made mandatory on the Amazon also to show the country of origin of a product when there was some problem with the India-China. And at that moment, the India made it mandatory that on the Amazon website also the origin of the country should be shown. Right now, if you go and check any of the products, there you will find this, the originating country from where this product is originating, as at that particular point of time, the people were being discouraged to use the Chinese goods, isn't it? So that is why the rules of origin are important. And the second thing he says, the duties differ from the country to country from originating point. That is the purpose, that originating point should be made clear. Safeguard measures, restricting the imports temporarily if the domestic industry is injured or threatened. That if you feel that domestic industry is at a loss, right, it is being injured or it is being threatened by the imports, you can temporarily suspend the imports, right? After the domestic industry has regained its importance, is back to the normal, then you can again start with the imports, right? Then you have the last point, that is the embargoes. Embargo is a total ban on the import or export of a single or all the products from all or specific country for a specified or indefinite period. It is a total ban. It is the most extreme form of trade barrier. It is not practiced normally, but yes, in certain cases it can happen when you feel that economy is in danger, when you feel that the domestic industry is in danger, then the embargoes can be put into place. A total ban on the products, right, on all or single products from all countries or from a specific country. So that is why it is known as the most extreme form of trade barrier, right? So these are all the non-technical measures that we have discussed. With this, the import part is complete. Now he says, let's talk a little bit about the export related measures also. Simple, sir. Ban on exports. Restricting the exports during the shortfall in the country or any such adverse condition, that if in the country there is a demand for the product but there is a shortage of the product, and that product if being exported, sir, he says first fulfill the demands of your economy, then the other economies, right? What they say is fulfill the demand of your economy first, then fulfill the demands of other economies. Stop the exports, right? Export taxes. The tax collected on the export of goods, it can be specific, ad valorem, and it decreases the export. Obviously, if you increase the taxes, the exports will be reduced. Also, it reduces the domestic market price and leads to the higher domestic consumption. Obviously, more goods will be available domestically. When the more goods will be available, the price will be down, competition will be high, the price will be less, the consumption will be higher. Export subsidies and incentives, that if you want to increase your exports, in that case you can give the subsidies and the incentives. Financial contribution from the government to exporters in the form of grants, loans, reduction of export duties, provision of subsidies with a view to boost the exports. Now, in first two cases, you want to reduce the exports. Here, what you want to do is reduce exports, right? If you put the ban or if you increase the taxes, in the second case, you want to boost the exports. Now, the last is voluntary export restraints. It is a type of informal quota. The exporting country voluntarily restrain the exports during the specified period, usually upon the insistence of the importing country or for the political reasons. The VERs may sometimes be referred to as the orderly marketing agreements. Now, two countries enter into an agreement, or two countries decide, negotiate that please, the importing country ask the exporting country that please stop the exports for some time. It is being damaging to our economy or something like that, or for the any political reasons, right? There can be temporary stoppage of the exports by the exporting country. Now, it is not a restriction by the importing country. It is the voluntary stopping of the exports by the exporting country. The exporting country says, okay, nothing to worry, we will stop the exports for some time, right? So this is the voluntary export restraint. So these are the export related measures, and with this we have done our chapter number 11 also, instruments of trade policy, right? So next three are very easy chapters. Understand this, very easy chapters. We'll just go through with the reading, understand small things, nothing as such, lot of things to understand in the depth, but very easy chapters, very normal chapters. Even if you will read, you will be able to understand, right? But we'll do it, don't worry about it. So in the next lecture, we'll be starting with our next chapter, chapter number 12, that is trade negotiations. We are just left with 3 chapters and we are on target completion. Don't worry about it. On target completion, sir, as promised that we'll be completing it by March, end of March 2023. So we are on target, and the next in the next lecture, we'll be starting with the next chapter, trade negotiations, right? So see you guys in the next lecture. Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.